Hey, this is Matt from InvestiQuant. Today is Monday, July 19th, 2021. On Friday, the markets closed down at the lows of the week, at the lows of the session. And in the overnight session so far on this Monday, we have continued the move lower. So we are opening below Friday's low, which was also the low of the week. And that's what we're going to be testing here this morning, is what has happened historically when you gap down below the prior day low on a Monday and Friday closed at the low of the week. So I've got all four instruments selected here. The trade type is a long that is based upon entering at 9:30 a.m. Eastern time. The exit is set to 4:15 p.m. Eastern time. Now, as I said earlier, we are trading below Friday's low. And I'm going to add that to the test here by going into the opening filters in the opening area. I'm going to click equals next to open below prior day low to add that piece of information to the test we're going to be looking at here. And then next I'm going to go into the price pattern section, and I'm going to say that yesterday closed at a 5-day low. So to do that, new low section, very top option here, equals day after a 5-day low close that took place there on Friday. And then next in the indicators, I'm going to put us in a similar market environment. We are now below a 10-day simple moving average, but above a 200-day simple moving average. And then lastly, I'm going to go into the calendar library, and I'm going to say that this is Monday. So we're starting off the week at these recent lows. So let me go ahead and hit view results, and we'll take a look. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time and exiting at 4:15 p.m. Eastern time when it is a Monday and the prior session closed at a 5-day low. Today you are opening below that prior day low that closed at a 5-day low. This is taking place in a weak bull market, which I've defined as below a 10, but above a 200-day simple moving average. Historically, there are 25 samples to examine dating back to 2003 for the S&P. We've got 26 for the NASDAQ, 21 for the Dow, and 20 for the Russell. If we look at the win rates on them, they are mixed. So S&P coming in very neutral, 52%. The NASDAQ is weak at 35%. The Dow is the strongest at 62%, and the Russell is weak at 40%. So kind of all over the place there on the win rates. But if we look at the average win and average loss, they all are in agreement here that the bigger moves have been on the downside. So the average loss for the S&P is quite a bit larger than the average win. For the NASDAQ, it's just a little bit larger on the average loss than the average win. On the Dow, the average loss sizably larger than the average win, and the average loss in the Russell about twice the size as the average win there. So historically speaking, the bigger moves have taken place on the downside, and you can see that's really picked up here over the last handful of years just by looking at the equity curves there, where they were fairly flat for a while, and then since about 2018, they have really been moving lower. So hopefully you found that helpful. Good luck today, and we will see you next time.